morning. It's Friday, November 17th. It is the Friday before Thanksgiving. What do you want to do with your positions on the Friday before Thanksgiving? You want to take stock. What do you own? Are these trades? Are you up 30, 40% on some of these? Because some of them, I'm up 30, 40%. I'm not necessarily looking to get rid of them, but I am taking stock in the day. So here's SPY. Where are we at? Where you at? Where you at? I was singing Peanut Butter Jelly Time. If you ever want a fun little thing, go on YouTube and Google Family Guy, Peanut Butter Jelly Time. Peanut Butter Jelly Time. Where you at? Where you at? Where he at? So here's where SPY is. I said it yesterday in the newsletter. 450 is kind of a resistance point in my mind. You got this 455 gap that comes up right here. And that just goes back to, let's see, August 1st, where we started a little downslide, and then you had a little rally in August, and then you had the September and October, pull down. And you had the further October pull down. You got some hype in here. If we are going to continue the rally to all-time highs, you got to break this gap. This gap up here to 456. You got to break that one. Doesn't look like it really wants to do it, but it also hasn't pulled back to the 446. So you want to make sure that you're watching SPY for the direction of the market. You can also watch QQQ. I've got an article today about inflows into the market. I'm not going to go over everything that's in the newsletter because I've got too many articles, but there are inflows to the market here. I don't even know what this is. Oh, that's the to all-time highs. I shouldn't have moved that one. But this is where you're at to all-time highs. That yellow line right there are the all-time highs. You still have 5% up to the all-time highs. And for the Qs, you can see it. Here, I'll draw another line here because you can see where the double top may be happening. You have to get over this 387 level. Right now in pre-market, you're at 385. If we're going to continue our way up, then that's where you have to break. And if we break above that, let's just look at where we'll go back. You know what? We're going to go to a weekly on this one. And this is what you want to do. You want to look at different time frames, and you want to look at where we were at the all-time high back here, November 22nd, week of November 22nd, 2021. We're at all-time highs. Well, where are people holding from that point forward? You can see here, there's a volume shelf right about 372. That would be where your first support level would be at. You can do auto fibs. Auto fibs right here, you can see 321 would be another level. But going up, you just don't have a lot of guidance as to, hey, are we going to continue up? Right now on the weekly, you have confirmation. The 50-day is moving positive. The 200-day is moving positive. But you want to be careful in this market. One of the things that I want you to go and read is this string of tweets from Tom Lee. Solid. Tom Lee has been more right than he is wrong. And so you should absolutely follow him. This is a string of about four or five things. Let's see. He's got 7 things as to 8 things. Let's see. Yeah, it's 8 things as to why we are continuing in this market and why he thinks the bull rally will continue to go. 7 things. Growth Investor once told me the long term is a series of short terms. This is a good explanation of the rally in equities we've seen since the end of October. He sees it continuing on. And the Qs, you might see it go to the all-time highs. You might see it go past there. You just want to be careful. And specifically, you want to be careful because we're heading into a holiday week. So if you've got trades out there, if you've got some gains, there is never, nobody will look you in the face and say you took a 40% gain when that stock was up 80% the next week. If somebody makes fun of you that way, or if peer pressure, I mean, think about in school at the lunch table, all the kids who would make fun of the one kid who, brought vegetables to lunch. That kid didn't have a heart attack at the age of 25. That kid probably ran a couple of marathons by the age of, 22. That's the kid you want to be. the kid who takes profits, not the kid who's, got heart disease at the age of 22. So understand, that's where you want to be. Get in your head. If you have identified a trade, then trade it and take your profits where you feel comfortable. That's why I traded Palantir. And speaking of Palantir, there's an article that I will put in the newsletter about Palantir specifically. Palantir. I'm looking for it right here. Here's the link. Let me get this link. Palantir is $50 out of the question on Palantir. Remember, you're trading at $20 a share right now. $50 is not unreasonable according to this analysis. I'm not, I won't be upset if it goes to 50 because I'm going to get back in. I just thought it had ran its course. So understand, that's the leverage that you want to take. That's the direction that you want to go. Right now in the market, Walmart, it was dominating yesterday, and that's why we were down, for most of the day. I think it went down. But Walmart, you got this enormous gap on Walmart between 159 and 168. That will start to get filled. Just understand, Walmart has you out. It is oversold, and Walmart is up 0.26%. They said that they saw weakness in the economy. The CFO says October trends have made them pause and rethink the health of the consumer. More specifically, Walmart said they saw a sharp fall off in sales during the last 2 weeks of October. Management said there is still a strain on the consumer, and they are more cautious than they were 3 months ago. That's not good. Now that is the largest retailer in the United States saying we are using caution based on the last 2 weeks. They were at an all-time high. That stock was bound to drop. This poses an opportunity for you to get in. When do you want to get in? That's up to you. On the long term, you're not even touching the 50-day. The 50-day is down at 152. This is a solid stock. Even in a recession, people are going to start going to Walmart for their groceries. The algorithm over 2 years, you make 13%. Over 2 years buy and hold, you make 10%. This isn't one that you trade. This is one that you get into. I've owned this for years. I've owned this one. The 200 days at 140 on the weekly. You just want to find your opportunity to get in. This right here in 2022, this was, where they announced, hey, we've got some inventory problems. That candle right there in 1 week on Walmart was a 20% drop. The high, 149. The low, 117. They got stuff in line. This was when Target had problems in May 2022. This was when, hey, we're seeing stuff break in the economy. That's when people got scared. People started to sell. On the weekly, it got under the 200-day. That's what I'm saying. I don't know that 156 is a great price for this one. I think it's a solid price. But when you go over here to FinViz and you look up Walmart, they've got a 25 PE, a forward PE of 22. You can get Meta, which is growing, and Meta has a forward PE of 19. So, understand which stocks you're buying, what you're investing in, things of that sort. Difference in retail, BJ's, they lowered guidance today. And so they're kind of like a Walmart. It's a superstore. I haven't been to BJ's parking lot, and I'm going to inappropriate laugh whenever I say BJ's parking lot. And if you don't know, here in Atlanta, there's a northern city in Atlanta called Cumming, and they have a BJ's Cumming. There's a Dick's there too. So we can go on, and I'm going to get flagged and demonetized for this. But here is BJ's. And they announced that they have weakness. It's down 5%. It's at 64. It is under the 200-day. I am not a BJ's investor. I don't own a BJ's card. But BJ's, they said the same thing as Walmart. Now, here's the difference. Go and look at Gap. Gap last night announced an amazing quarter. Amazing. They raised their guidance. They blew away earnings. They're in pre-market up at 16. That is off this chart. Just understand that is off this chart. We go and we look at the weekly, and you see the 200-day is at 1638. Well, guess where we're trading? 1623. So understand the long term of charts and understand the short term of charts. And identify. This is why I say when you get into a trade, you want to identify where your holdings are. If we look back here and we look at May 2021, we bring that volume gap back there. There's very few people holding up here. They're all holding down here at 14. So get ready for a sales onslaught when they start trading at $16. That's the way the markets work. Expedia, they got an upgrade. They got an upgrade to a $200 price target. A $200 price target. This is trading at 129. If we go over here to FinViz and we look, the average price target, 131. But you can see Evercore in line, $200. So solid company, solid earnings, solid everything. But Expedia, they're $5.41. I mean, that's the gap. Are you coming back down here to 107 to 95? Probably not. Are you coming back down here to 119? In pre-market, this is trading at 134. So identify if this is a long-term holding. You don't care if you're buying at 134 and it's trading at 129 yesterday. You don't care. But understand that this is a solid company. And that upgrade from Evercore with a $200 price target, you know when it was trading at $200? February 2022. You just passed the 200-day. So if Expedia is one of these companies that's putting AI into the travel business and blah, 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 that's a company you can invest in. Carvana. Yesterday, this and other stock companies, or car companies, just shot down. You're at 0.96 down today, down at 32. You can see this one was trading at about 35 and it just shot down about 10%. Amazon is getting into the car selling business with Hyundai being one that they're selling. So in my mind, I think that just means, hey, let's buy some Amazon. If you want to watch a masterclass on Amazon and how I looked at the charts, go and watch the live YouTube. Sorry, I was turning off SIRE on my iPad. But if you want to watch how I looked at Amazon, I think there's a channel in Amazon that I think is likely playing out. And I drew this and I draw reasons and I tell you why. But we're just over the 200-day. The support on Amazon is going to be around the 138, 139. 142 is not a horrible price for Amazon. One that is in our core portfolio, and my father sent me this email because he is a member of Motley Fool, is Roblox, RBLX. And this, ironically, is the one that's up the most in the core portfolio. It is up 1.38% today. Let me just get to Roblox over here. It's trading at 38. I do think $40. Remember, $30 was the price point that I thought before. You might get back down to $30, but their product day and everything else, solid play on Roblox. And it again, aggressively buying from Motley Fool. And I want to talk about the difference between Motley Fool, Seeking Alpha, and TrendSpider. So TrendSpider is your trading program, and they do have a sale going on. It is $382 if you take the 7-day trial, $300 if you skip the 7-day trial. This is TrendSpider. I am going to put out a collaboration that I just did with Jake from TrendSpider. He's a product expert on TrendSpider. He goes over unusual options, seasonality, all of the volume stuff that he sees, RSI. We even build a 1-hour Apple strategy that I will share that just blows away buy and hold for a long period. He's launching it as a bot. But here is, this is TrendSpider. It's charting program. This is technical trading. This is just based on the charts, based on the numbers. Seeking Alpha, on the other hand, is more of a fundamental, hey, let's look at the values of stocks. Let's look at this stuff. I have a full-time job and I don't want to look at 400 companies and I don't want to look at stock charts. This is Seeking Alpha. In fact, I just showed on the live, Seeking Alpha, Apple at 190, you want to sell it. Well, Seeking Alpha will send you a text It will send you an email. It will send you whatever you want if you want to put in a price. Say I say Devon at 50 and you want to buy it when it breaks under 50. Set a trigger there. So you can do all of that in Seeking Alpha. You can also import your portfolio and things like that. Now, Motley Fool, my father subscribes to. I have never liked Motley Fool. It is more of a service where they tell you the stocks that they recommend. Yes, there are other tools in Motley Fool. Yes, you can do stuff. I'm not a huge fan of Motley Fool. I think they hang their hat on Netflix and Amazon too much. Because, who wasn't investing? If you weren't investing in Amazon and Netflix back in the day, you weren't paying attention. When Netflix went from a DVD service to a streaming service, they were probably 2 years too early, and it was risky. But if you didn't put money in there, it wasn't a big deal. But they hang their hat on that a little bit too much. And speaking of Jason, we have a strategy from Jason, a Tesla. Did you know you can strategy fair value gaps? Here's an example. This one goes short on a bearish retest of the fair value gap and beats buy and hold by 10 times over the past year on Tesla. I will include this strategy in the newsletter. So understand the newsletter is the main focus. It gets all my notes, and I basically put them into a newsletter form. So you get it in your inbox every day. But to go back to TrendSpider, again, $300 for the year. Seeking Alpha, $189 when you use the $50 coupon below. Motley Fool, I think my father pays about $200 for that. So it's an interesting one, but I'm not a guy who likes, doing that stuff. One thing, and I'm going to have to do this. Let me see. Does this? There we go. Apple announced, and I'm going to put this up here. I'm going to start links. But Apple announced that they are going to the Rich Tech service, I think it's called. Rich Tech. This just means, hey, Google Android people, I might be your friend again. Because, if I don't have green bubble, I think they're still going to do green bubbles. It just means that, hey, videos that I send to Android people that come out like the size of your thumb, they'll start being a little bit higher. So it's going to happen next year. It's not something that, Apple's going to do crazily and get rid of their advantage right away. I think there probably will be some type of restrictions around it. They just said, hey, we're going to do this. So, take a look at Apple. There are some great articles that I will include in the newsletter, specifically that Palantir one that I talked about. The Apple one I'll include. There's a great article here on earnings next week and dividends that were announced. So I'll include this article in the newsletter. Sign up for it. I'm not going to go over the details. There's also a great article that I read this morning about investors inject capital into the fund market for the fourth consecutive week. You want to know why we're going up? Fourth consecutive week, money has gone into QQQ and IWM. Things like that. And money has come out of SOXL and TQQQ. And that just means we might be getting to a top. This is important stuff to understand and look at. We talked about the Roblox upgrade. This is an article for anybody that's invested in oil. This is a great article that tells you a little bit more about the supply and demand and what happened and what's going on. Oil today, let's just go over to FinViz. I think it's up about 1.2% or something. It's up 1.8%. But this article explains exactly what happened if you want to read about it. Too much supply, too little demand, too many premiums, too little fundamentals, what to watch. It's a great article. Sign up for the newsletter. I'll include it there. There is a huge insider buy on Square. And what I'm going to include is this Seeking Alpha article just published today, blocked squarely in my crosshairs for an undervalued growth stock. Now, this person, he's on the Sequoia Capital, I think, just bought, let's add it up, 25 and then about 2 million. So about $27 million worth of Square at $50. Where are you trading right now? To quote the peanut butter jelly song, where you at? Where you at? Let's see, Square right here, $56. So he's got a nice 10% gain already. That's $25 million or 27 million bucks, 10% gain. That's $270,000. 27 million, I guess that's 270,000. That's nice. I mean, that's nice. Clearly, at 46 with solid earnings, 43, the algorithm got you in. Now you are pulling up against this 200-day. You want to make sure that you hold this 200-day. You have some gaps down below. If you cross and hold that 200-day, my expectation is this gap up here at 72 might get filled. So Square, solid play. And let's go to social requests. Rafi from Spotify, ARCC. I don't even know what the hell ARCC. This one sounds like a doozy, Rafi. Ares Capital Corporation. This has been, catch you in at 19 here. 1903, you're at 1968. Not a horrible gain. Let's see. How much is that so far? You still have confirmation. Not great confirmation, but solid. 5%. 5% in 28, about 20 days. So not a horrible gain, but it looks like it's been all over the place. So I don't know that I necessarily would buy here. Let's see what they do. Let's go over to FinViz and we'll see ARCC. Ares Capital Asset Management is financial. They are not making money. Forward PE of 8. It is up 6% per year this year. I see a downgrade from Wells Fargo, $20 to $18. The average target price is $21. Nothing excites me about this. Top dividend stock, 9.78% dividend. Solid, and you're up 6% this year. It's got a super, it's only $11 billion market cap. Not huge, so it's not on any index. They have 569 million shares floated, only a 3% short. I don't see anything horrible about this. Let's see. May and March, people bought a couple $100,000. Nothing excites me about it. Let's go over to Seeking Alpha and let's take a look at ARCC. We're going to get out of that one. ARCC, Ares Capital, a couple buys. Solid buys the quantize as a whole. I just don't see anything that necessarily says, oh my God, get into this one. If you're younger, Rafi, 9.6% dividend should not excite you. What should excite you is growth. Because essentially what happens with capital corporations, let's see, what do they do? Are these guys a REIT? Business development specializing in acquisition, recapitalization, mezzanine, debt, restructuring, rescue financing, and leveraged buyout transactions of middle market companies. So this is Wall Street. If you watch it sounds like Wall Street. Watch the movie Wall Street from the 80s. Great movie, by the way. Fantastic movie. Just sounds like a headhunter kind of business where they're killing it. But nothing exciting. It doesn't excite me. Checkpoint. Alexander from Spotify wants me to look at Checkpoint. Checkpoint Therapeutics. It's a biotech company. I know nothing about it. Looks like they're losing less money, which is good, but they didn't pop on that. It's trading at $2. If you want to trade a long term of this one and we go to a weekly, yeah. This is a therapeutics company. It's a bio company. It's gonna, let's Checkpoint. CKPT is the thing. Let's see. Market cap of $39 million. This has market cap of $39 million. They have an income of minus 53. They have cash on hand of 8 cents, and they only have 21 million shares outstanding. So you've got a bankrupt company coming in here. 12% short interest. I wouldn't touch this one. I would not touch this stock. Insiders are selling at 5, 4, 6. Yeah, I would not touch this stock. I just, you may know that they have something coming out and something solid. Third quarter results. I just would not touch this. Hidden gem. Yeah, look at this. Hidden gem, $35 in 2024. Flying under the radar, $35. This is what FinTwit This dude, Biosensal, $35 on PDUFA approval. I don't know about approval. Do I want to put my money and gamble? No. I mean, it's trading at $1.81. I wouldn't get into that one, Alexander. There's better places to put your money. Let's talk about the scans, which are better places to put your money. Microsoft, all-time high. This one's solid confirmation. Am I buying it? Hell no, I'm not buying it at the all-time high. Am I getting rid of it? Hell no, I'm not getting rid of it. Not at an all-time high. It's got solid confirmation even on the weekly. The 50 days moving positive. This is just a solid company that's adding to their revenue stream. SCO. We've talked about the problems with oil. This is a triple levered ETF on the short of oil. So when oil goes down, this one goes up. We've just had another cross up on the MACD. It's been in a solid move from 17 up to 20. You're over the 200-day. This one long-term likes to stay under that 200-day. And we could look at a weekly. Remember, these are decaying assets. This one has never even, the only time it got up here was COVID when it got up to the 200-day. This is a decaying asset, so you don't trade it on a weekly. It's not an investment. You don't hold on to this one for a long time. If we want to look, we can look at the 65-minute algorithm and see how SCO trades. SCO trades and loses. The 65-minute algorithm, which is just based on an 8-day EMA, loses you 16% versus buying and holding this 8 months ago, you're down 30%. Now, this one, the 65-minute algo had you in at 18. There's been a lot of people who've used, who've told me they've used the 65-minute algo on different stocks and have made. Joe was trading, I think it was Mullen, MULN. He was trading on the 65-minute, making some good moves on that one. And the only other one that we have a scan for is Travelers Company. This is an insurance company. It's over the 200-day. It's another bullish move, 164.93. You guys know if I were to buy an insurance company, I'd just buy Berkshire. That's what I would buy. I wouldn't be buying like Travelers Insurance. I'm not a big insurance guy, but Berkshire seems to be making that one work. So Berkshire's one that I would just look at. Okay, we're heading into the weekend. I may be on Monday. I may not be on Monday. I am driving to up north. So Monday I might be doing something driving. So we'll take a look at next week. Subscribe to the newsletter. That's probably your best bet. dailystockpick.substack.com. Any of the links that you want, they are at Linktree, linktr.ee/dailystockpick. Again, TrendSpider's up there. They're having their sale. It ends next week. Get in while you can, because what happens afterwards is I get the standard 25% off. It's still a great buy. At 25% off, it's still a fantastic buy. Seeking Alpha, $50 off there. Join Webull. I was on Webull yesterday. They were talking about their IRA. And remember, you get 5% cash, 5% on your cash. So while you're sitting there waiting for to buy a stock, they're paying you 5%. You don't have to put it into a bond like you do in Fidelity. You just get 5%. Solid play. Webull, you get 12 free stocks. I think it's up to 20 now that you get when you sign up through this link. The newsletter is right there. Visible, if you're paying anything more than $25 a month. I just saw a commercial with Visible with George from Seinfeld, and they were going for yada, yada, yada. This is not yada, yada, yada. It's $25 a month. There's no fees. There's no services. There's nothing. It's $25 for a single line. If you're paying anything more than $25, you're crazy. $35 is the upgraded plan. Premium data. This is a solid plan. If you don't like the 25, upgrade to the 35. And you get the same service that you get with Verizon. If you are buying a Tesla, first off, congratulations. It's the best car out there, in my opinion. I would be driving my Tesla up to New Jersey. And I do have full self-driving, and it is absolutely fantastic. It changes lanes for me on the highway. I love this car. But Tesla, if you're buying it, you'll use this link. You'll get $500 off in 3 months of full self-driving. If you have AT&T, I would urge you, if you've got cable and you're not happy with the internet at your home, check that AT&T is available at your home. You'll get a billing credit. I get a billing credit. It's kind of nice. If you have Verizon, I would say go with Verizon too. It's just cable service. I haven't had much luck with cable service, but if you're happy, hey, stay where you're at. Savvy Trader. This is part of, if you want to sign up, I have two portfolios. There's a trading portfolio and there's a core portfolio. The trading portfolio is up 10%, 9.75 in 30 days. The core portfolio is an equal weighted. This is the one where if you're new to investing or if you're just looking to put some money somewhere, find one of these stocks. One of these stocks, it's one of those, these stocks are ones you can buy. And in my mind, 5 years later, you'll be perfectly fine. Roblox is in here. This one, I think it's, even though they're losing money, solid company. SMCI, solid company. This one trades right along with NVIDIA, where their earnings are coming out in a couple of weeks. Occidental, TSM, which is Taiwan Semiconductor. We see how Intel's trading. Bank of America, Devon, you have Goldman Sachs in here. It's an equal weighted look. And so the reason why I wanted to do an equal weight was when I looked at comparing with SPY, back here in June, I think it was June 17th, we were at our highs, okay? And I just said, okay, I'm going to buy 100 shares of everything to prove to everybody, hey, it doesn't take a lot to kind of point out, hey, we can get over the S&P. Say you just buy one. This is a $690,000 portfolio. Okay, it's 100 shares of every stock. If you just bought one of every stock, that brings you down to a $6,900 portfolio. Not horrible, but look at the performance against SPY. The daily stock pick core portfolio up 3.73 since June. The S&P up 2.73. I'm beating it by a full % just with these stocks. And yes, I do pull stocks out, and yes, I do pull stocks in. You can go to the history and take a look. I put in Costco paid a dividend, Apple paid a dividend, NPLX paid a dividend. Coke, I sold Coke. I sold out of Coke. I pulled it out of the core portfolio. I pulled 100 shares out. I bought 200 shares by accident. I fat fingered Oxy and bought 200 as well. But Oxy paid a dividend. I had to put in more cash just to buy it, paid a dividend. I sold Snowflake. I pulled it out. I pulled out Moderna from this. I pulled out Target. I pulled out QCLN. So you can see I do make moves. They're just not often. If you want to trade, then follow the trading portfolio. I do it a little bit more often. Again, this one's up. I just got out of my Palantir. I pulled out Palantir from this. I did not pull out Palantir from the core portfolio. It's still in there. I will be back in. So that's Savvy Trader. That's the explanation. You know, I got to do a video about how to make money with my using my my podcast and the tools like Seeking Alpha and TrendSpider. And I'll do a video going over my day. But I am going to do a short on YouTube, just how good Seeking Alpha is and how I use it during the day. If you have any questions, up here, there's an email address right here. If you do sign up for TrendSpider, sign up here and go through and sign up. The second step is you do have to go and email me. The email is right here. It's dailystockpick3@gmail.com. And once you email me, I'll email you a welcome letter back that will include all of the algorithms, the watch list, and scanners. You basically just import it. It's nice, click and play. If you don't order TrendSpider through me, you're kind of set up, to where you've just got to input, build that stuff yourself. That's the benefit of signing up through me. So if I don't talk to you, have a great Thanksgiving. I will be back on next week at some point in time. It's just going to be hit or miss because I am up in New Jersey. Okay, take care. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.